And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning. Welcome to Financial Fitness Friday. I'm Rich Rosso, CFP, with the Danny Ratliff, CFP, Certified Financial Planners Squared. Here to discuss the trials and tribulations of markets. Ho-hum. But we're glad you're here. And the week flew by. It's always nice when you have Monday off, because it makes the rest of the week go by real fast. Although I worked pretty much the day Monday. I'm probably sure Danny did too. What's a holiday? So today's a big day. Big, huge day. August employment report coming out today at 7:30 Eastern. Everybody's very anxious. Non-farm payrolls August, 163,000 expected, 114,000 previously. Unemployment rate expected 4.3. So average hourly earnings, which will also be a big focus. Right, Danny? So we always say, this is the most important number of our lives. This one might be a very important number when it comes to what the Fed is going to look to do. Is it 25 basis point cut or 50? Basis point cut. So this, a lot of focus, and I think the market's behavior today will be dictated by that number. And we also have seen JOLTS, right? JOLTS is the worst it's been in 3 years, right? We've seen where we are there with job openings. You can't seem to hop from job to job and make more money anymore, just like you did. So I call this the normalization post-pandemic, right? Stimulus cash running out. We're going back into the muck. Doesn't mean recession, but what do you think?
Well, I think this could mean like slower and lower for longer at some point, because, now we're getting back where a lot of these things are flowing out of the system. And as that's occurring, I think the Fed is tasked with a really difficult job, which, always with, them talking about transitory with inflation and interest rates. Here we are, and everybody's saying, listen, this could be the most important number that we've seen in a long time. And really, I think that what this is going to dictate is, do we see a 25 basis point cut in a week and a half, or do we see a a little bit bigger where you get a 50 basis point cut? And so, I'm not sure if they come out with a 50 basis point cut, unless these numbers are just terrible today, what does that signal to the market in general?
I agree.
Because does that say, hey, we've been aggressive for longer. They've been trying to not make the mistake of, decades ago where they started cutting, and then next thing you know, inflation ramped right back up, and boom, they're right back in the same problem that they were. And so I think they're tasked with this difficult scenario in the sense of, how do you do this, not spook the market, but yet still, keep the economy on track and get that quote unquote soft landing? That's going to be difficult.
It is. Those mandates are plates spinning on fingers right now, and they have to, and they're walking the tightrope at the same time. So I agree with you. That's first move, the size of that first move is going to be heavily scrutinized, because it will tell us what they're feeling about the economy overall. So that is going to be, just going to be interesting to see, because again, they are not at their inflation target, and they say they have dual mandates and equal mandates. So unemployment rate ticks up. Right, it's above their 4% number. It's within the range, but I do think, this is my own opinion, inflation is a lot more painful of an issue.
Well, that's the issue, and those
that's
dual
where
mandates are difficult, right?
Oh, absolutely.
Because if you want 2% inflation and yet you only want 4% unemployment, that's going to be tough to do. So essentially, they're going to probably likely need to see an unemployment tick higher in order for them to meet that inflation mandate.
Yeah.
And for years, we had 2%. Do they change the mandate at some point? Previously it was higher. GDP was doing better. GDP is still there, but we are beginning to see, forward guidance. There's a lot more uncertainty at the moment. And that could be, a combination of things. Obviously, the election coming up. We've had a good year by most metrics. And if you even look at bonds have done well. We've seen the yield drop significantly down a bit today, this morning as well. So 10 years at 3.69. Beginning of the week, what was it, 3.85?
Well, listen, the Harris camp's going to have a problem with the narratives because they always say the stock market doesn't matter, right? So if the stock market doesn't matter, it doesn't bring anybody joy, and you're really going to be, you're touting your economic success, it doesn't help when you're starting to see growth slow down and the economy and economic numbers as far as unemployment and labor. When labor starts to crack, we've got a problem. So I don't think there'll be a lot of boasting of economic success here. So that's going to be a tough one. I'm sure it'll be spun. It's politics in some form. But if these numbers continue to be weak on the employment side, that will be an issue.
Well, the things that do matter are those jobs. That's what
The
really
jobs
matters.
do matter,
Inflation
yes.
really matters. So the economy matters, and the stock market's typically looking out ahead. And so, we're back right now. We just broke the 50-day moving average yesterday. We, right to where we were August 15th. So, we take a step forward, a step back, and that's okay.
It's
Sometimes it
volatility,
burns
right?
off some of that excess. And it may be a nice setup. We can hear a lot of different narratives. This is a long bull market, secular bull market, everything's going to be fine, but we should still expect volatility even if that's the case. Now, however, where we do have those concerns is that as we begin to get more and more information and we see things sliding downward, that becomes a bigger issue when you start to get all these things at once. And so the narratives where we have to be cautious. And we have to be worried about, okay, what is that bigger event that could possibly be out there because of a combination of all these things at once? And that's where, the job of managing money becomes a little bit more difficult. And at the end of the day, we got to think about this. What you're managing money for, if you're doing it yourself, you have somebody doing it, it's to reach that longer term goal. So can you still meet those goals that you have, those objectives? So putting it into focus as far as what that means, but then also, having funds available to take advantage of this volatility, if it's just that, I think it's going to be extremely important, but also difficult to manage because as we, begin to get more information, and I suspect we're going to get a lot more data coming in that's, there's going to be a bigger spotlight shine on it now because of what's going on, because of the political environment, the election here in essentially 2 months.
Feels like it's been on. We've had this election for like a year.
Yeah, it does.
It's like I've got fatigue from it. The election cycle seems to start a lot sooner. But yeah, 50 basis points, Fed looks to cut. Powell at one time said, no, I'm not going to consider it. But you got to remember, they can always blame data dependence, and markets will let that pass. So it's, again, I have no clue how the market will react. I think they are absolutely expecting the 25 basis points. So if he says he's not, if rates don't change, that will be the ultimate problem.
Well, you could see yield spike, stocks drop until they figure out where we go from here.
And Brent left a classic on my computer today. The last time I had faith in the news was when it was with Huey Lewis. Perfect. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint, Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. RealInvestmentAdvice.com. RealInvestmentAdvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Oh, we're back. I was enjoying the music. There we go. It always sounds different. We have new music. We have new bumper music every week. That's a joke. I got out of high school. This was the bumper music. We're still playing it. So we have our retirement blueprint coming up. So if you're in the Houston area, want to have a little breakfast, according to Danny, that'll be stale muffins and cold coffee because that's cheaper. But if you want to come to our retirement blueprint, it is really the structural layout, soup to nuts. What do you need to do as a pre-retiree to make sure you are what I call prepared to launch, escape velocity? So this is not no walk in the park. This is a couple of hours of your morning. We're going to do it at the Hyatt Centric over in the Woodlands. Very nice venue. I think it's 8 a.m. Was it September 14th?
9 a.m.
9 a.m. September 14th. Not week after this Saturday. Yeah. We made it 9 a.m.? Yeah. Because we don't want people coming there too early.
Nobody's coming at 8.
Yeah. Except us. We'll be there. Yeah, it's Saturday. You should be up at 4 o'clock. Come on. So
You should be able to sleep in on a Saturday.
Brent wanted it at 6 a.m.
If it were 8 a.m., we'd still be sleeping in. But for most people, it was a little
Dad's
early.
sleeping in for 8 o'clock. Yeah.
Yeah.
Brent wanted
8
it at
o'clock?
6 a.m.
Yeah.
because he was already up 3 hours.
Well, get it out of the way.
It's amazing how much you get done waking up early, though. I will say. It's a very productive period of time. I'm sure people that are night owls feel that way around midnight, and it's the opposite. But I do feel like it's much more productive time.
Yep, I agree. I used to be a night owl, and obviously
Oh,
can't
yeah,
anymore.
I don't even know what night is. I just read a report that lights at night, like when you're driving, or say just light pollution, if you're adds to dementia. Something with the lights and the contrast, it's the whole study. And I'm like, well, don't have to worry about that.
So did you buy your place in the country yet then?
There's no real light pollution there except for stars.
Yeah, that's what I'm saying.
But who's up? I mean, nobody's up to who's driving around at night. And
I think that whole premise may have something to do with the light-dark cycle.
that's what I think. Yeah, and
Yeah.
I think so too.
You need
circadian rhythms. And,
Yes.
Yeah. We have none of that. Stay up late,
Those
wake up
cicadas,
early.
they're crazy.
every 7 years.
They buzz all over the place.
Yeah.
I walked outside my door the other day, and I think I saw a locust. I'm like, perfect. I mean, just end it now. Where's the meteor? So, So speaking of meteors, we have a tax meteor that's going to come and blow you little people out of the water. It's called the Tax Cuts and Jobs Act. And what we try to do is we have been planning within our software that it is absolutely going to expire. If we're wrong, well, we're wrong.
Well, if we're wrong, we'll be happy.
We'll be happy. But I think you need to plan to understand the real story about the sunset of the Tax Cuts and Jobs Act. Now, you want to run your own numbers. That's perfectly fine. I've run them for clients. But the taxfoundation.org has a great federal tax calculator for the Tax Cuts and Jobs Act expiration. You can create your own custom scenario. But all this talk that you have to make $400,000 or more, if other than that, you're safe. Not really. Not really. So there are a lot of examples in this. Let's give you one. Sophia and Chad, married, 2 kids, adjusted gross income of $165,000, claiming about $26,000 worth of itemized deductions, $20,000 of pre-tax 401k contributions. If the Tax Cuts and Jobs Act was permanent, their tax liability was $36,041. On expiration, $38,491.50. That's $2,450.50. Well, that's not a couple making $400,000 or more. How about a couple making $85,000 who takes the standard deduction and had $5,500 of pre-tax? Kavya and Nick, married, 2 kids, $85,000. Tax Cuts and Jobs Act permanence, $14,386. It expires, Danny, $16,047.50. $1,661.50. So all this BS that the Tax Cuts and Jobs Act only affects the wealthy or $400,000 or more is bunk.
Well, we knew at some point
If we would come into this, right?
Yeah, that this was going to expire. And this would be a really easy way without them actually having to physically go out and raise taxes and pass legislation that they just say, we do nothing, we let this expire, and all of a sudden we creep back to where we were in 2017.
Yes.
Because that act didn't go in effect until 2018. And we saw the impact that it had to corporations, to households. It was great. But then we got into the pandemic and, it skewed the whole game. But now you think about where we are. While we are in a disinflationary environment, that 11%, that 9%, that 5%, that 3% inflation has not gone away. It is still there, and it's very sticky. So now,
you give me right.
If this goes away,
this is another kick in the.
You're likely going to have a 3% give or take for the average person.
That's right.
Increase in taxes. So, say a couple making $100,000. That's another $3,000.
Yeah, that's not chump change to a household that is already dealing with, like you said.
And wage
inflation
growth
act.
has declined. Where 4 years ago was like $78,000 for a family of 4, it's $74,000.
Yes.
So now you get another kick in the pants. And that's where I think this is, from a timing perspective and what we've been through.
It's terrible.
It's awful. And then claiming it only impacts those above 400. So what's happening is the Harris campaign has come out and said, okay, well, we are interested in, Democrats in general, are interested in keeping it. Republicans say they're interested in keeping it as well. So there's bipartisan support to some extent.
Just
the bigger
how they want to parse it.
Yeah. The bigger change is that, as Rich was just mentioning, is that Democrats say, well, we want to do it only for those making less than $400,000. We'll keep it intact. Everybody else will revert back to the old tax code, which, there's a lot of different things. There can be some things that you could be positively impacted. Right now there's a SALT deduction that's limited to $10,000. So that's state income taxes, right? Property taxes that you could only write off.
Democrats want that back.
Up to 10,000. Well, you think about the areas that really impacted.
Higher, yeah.
New York, you think about the Northeast, you think about the West Coast.
Absolutely.
It really hurt them in that aspect. But I think they benefit in so many other ways. So we also saw standard deductions, which were almost doubled. We saw the estate tax come down. I mean, there was a lot of other things that I think were positive enough that it made up for it. But there was a lot of people that were impacted. In fact, even here in Texas, we saw a lot of people impacted by that. You know, especially those states with higher property taxes.
Yes.
That seems to be where there was they were harder hit. So this narrative that this is not that big of a deal, it's disingenuous, number one. Number two, the impact is going to be so much greater. And that's what's scary too, is that now you're taking money out of people's pocket. And at a time where I think that, we talked to a lot of different people from all over the country, and I think everybody's frustrated with government spending. And we see what the impact of that is. And here we are saying, okay, hey, guess what, guys? Basically, they're telling you that they're a better steward of capital than you are.
Exactly. And you know what? There would have probably been a time I'd have been like sort of okay with it, because maybe you had people in place that were fiscally responsible. But now, forget it. I used to think, well, I love pay taxes, but I said, okay, it's my duty to pay taxes, and that's fine. And guess what? Now it makes me sort of want to, hurl. Like, where's this money going? I wish we had a sheet that said, where would you like your tax funds to go? Check the boxes.
Yeah.
Right? So it's this lack of responsibility and this wholesale spending without accountability that gets everybody. I think most Americans are okay with paying taxes, a fair share of taxes. I don't think anybody's out there trying to skirt them. It's just where it goes and how it's spent that makes you want to feel squirmy. Now I'm not even hungry for breakfast anymore. So that's the issue that we have.
Well, I think if the money was put to infrastructure, it was put to, truly helping, here.
Yeah.
People would feel much different about it.
Like defense, or maybe bolstering Social Security for helping older Americans, veterans, right? Things that are based on helping Americans and people who need it. Yes, I totally agree. So it's going to be a big issue. You would think it would just sunset quietly, but nothing sunsets quietly in Washington. So it's going to be interesting to see how they parse and parcel this. But keep in mind, if everything goes the way it does, everybody is going to get hit with higher taxes. And where we are from a debt perspective, where we are from an interest expense warrants that. And this is going to be big. Market, not so big. Taxes, big. And guess what? A lot of wealthy Democrats are going to be hit with it.
Well, but here's where, and we can talk about this on this side of the break, what the impact is to the overall economy as far as where do companies put money? What are they doing? What does that do to headcount? Yeah. They're worried about these mandates of inflation and employment. That's
your fourth. There's a lot. Let's talk about those kicks, because I like the way you put it. There are a lot of kicks that ordinary Americans, middle-class Americans are feeling, and that's another one. Kicking me while I'm down. How dare you? We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
My wife has this KitchenAid mixer. I bought it for like 15 years ago. And this is before, I guess, the invention of lighter materials. I'm not sure. Brent's nodding his head. This thing probably weighs a good close to 100 pounds.
It's a boat anchor.
It's actually shaped like a boat anchor.
The Real Investment Show podcast.
If you ever lose a boat anchor, just throw a KitchenAid back there. It also works as a propulsion system.
At realinvestmentadvice.com.
I'm not banging on KitchenAid. They're awesome.
It'll run forever.
And they run forever. Need to get rid of the body. Just
tie a KitchenAid to it.
Tie a KitchenAid to it.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. If you fail to plan, you plan to fail. Richard Rosso and Denny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back. Yeah, I just did a whole thing when I ran numbers on people married with 2 kids making $165,000, making $85,000, paying $1,500, $1,600, $2,400 more a year in taxes if these tax cuts sunset. Someone has been dipping into the MSNBC Kool-Aid on the live chat. Yes, people who make $2 million, because, you know, they're not working for it, they're going to pay $24,000 more in taxes. Right? So, yes, if you live in the Bay Area, you live in New York City, you live in LA, yeah, you're going to pay more taxes. They always want to pay more taxes. They can send in more taxes anytime they want. But I think if the taxes are used for the proper structures and things that we do absolutely need in this country, it makes sense. But what we care about is how it affects you, right? Trying to earn your money, trying to save for retirement, right? There's a Transamerica study showed that less than 1/5 of middle-class Americans are prepared for retirement. And I think that that's polite. So we have to understand that if the entire Tax Cuts and Jobs Act sunsets, everybody's taxes are going higher. If I'm single with no kids, making $75,000, my taxes are going up by $1,707. So some people would say, "Oh, what's the big deal? $1,700 bucks." But Danny, we've been talking about the kicks. We were talking about the kicks.
Yeah, hold on. I'm
Right.
gonna go one step back here.
Go ahead.
okay?
Go a step back.
So, Tax Foundation ran a study. So this goes back to the year 2020, and Lance has written about this.
I know.
Talked
I had
about
no
this
idea.
quite a bit.
Yeah.
But the top 1% pay 42.3%
Of the
of taxes. Top 5%, 62.7%. Top 10%, 73%. Top 25%, 88.5%. And top 50% of income earners are 97%. 97.7%. So the bottom 50% pays 2.3% in taxes. So meaning many are not paying anything at all. They're getting a refund.
So what's the fair share is what you're trying to say.
Well,
The
fair
bulk
share is
of the
clearly
wealthy are paying most of the taxes.
correct. So if you do have now this tax cut expiring is going to basically be equivalent to about $452 billion for the federal government. So it's going to hit everybody. But this hits a lot of people. And, it's interesting. We're a country of 330 million, and only 157 million tax returns are filed. Now, granted, you have people younger that aren't
Of course.
working. You got people out of the workforce or just
They
they
don't make
make too little to have to actually physically file. So, these numbers, I'm not pulling this out of thin air. I think that paints the picture. Now, the problem is, going back to where you were going, Rich, is that this is not just about taxing people and getting a little bit more money for the government. This goes way deeper.
Yes.
Because now you think about the people that are paying all these taxes. And, we look at the corporate tax rate. The impact of that back in 2018 was significant. Q2 and Q3 were actually the two best consecutive quarters we'd ever seen for corporate profits and revenues because they didn't pay as much in taxes. Now, what is the impact going to be if they raise corporate tax rates? What's the impact going to be to small businesses who are making personnel decisions? We got to remember as well, you may not like these people, but they are big economic drivers.
How many people do a lot of these people employ? How many jobs do they create?
Bingo, that's the key.
Right? Everybody hates Jeff Bezos and all these other people that are out there doing things. Okay? Every time you pick up a box and you didn't have to go to the store, it's because of that. You kill ingenuity. And no one wants to not pay the fair share. But again, I just ran numbers for someone who's making $75,000, families making $85,000, $165,000. So they're getting kicked again. Your first kick is real wages. Our median wages for the U.S. are down over the last 3 years. So I'm making less there. My real wages are down probably over the last 3 years about $3,500. I still have this embedded inflation. That's the other kick. Yeah, the rate of change is all fine and good and hunky-dory, but when I go to the store, those prices are higher. And now, if we go through and everybody gets this tax cuts and Jobs Act affects everyone, everybody's going to be paying another couple of $1,000. That's the holistic way, because money's fungible. And if you don't find a way, if Kamala Harris is correct and she's not going to raise taxes for those making less than $400,000, then it saves a lot of these people probably the money if it stays within that range. I don't see that happening, especially with the debt we have going. Everybody's going to be paying more because of the way we've been spending money. That Inflation Reduction Act, that second stimulus package when the economy was already recovering, was absolutely ridiculous. So now, as planners, how that affects us is we have to help people understand you can retire. How is it going to look? Many people are cutting their contributions to their retirement plans just to stay afloat, Danny. There have been studies about that too. Right? Well, I'm not even going to contribute. I can't contribute to my retirement account anymore. Right?
Yeah, I think there's a lot of people that are struggling just to make ends meet. They're living, hand to mouth, and that's why this is a problem. And, somebody mentioned, $452 billion is a drop in the bucket basically to $26 trillion deficit. Yeah, of course. Running a $2 to $3 trillion deficit over and over.
You would think
that's a problem.
Yeah, that is a problem.
Now here's the issue is that we become so dependent as an economy on government spending that this is where the bigger issue comes, is that what we truly need is austerity. But we are not going to like the outcome of austerity. I can assure you that. Because that's not just going to be a small recession.
You're talking about like some form of financial enema.
Yeah.
We need that.
Well, you do.
Flush it all out. Yeah, but we never let cycles
cleansing.
happen either. We never let cycles happen. Market cycles don't happen anymore. The Fed gets involved, right? Now the Treasury and the Fed are always in cahoots to manipulate yield curves. I mean, Michael wrote an incredible article about this, about how many ways the Fed has to manipulate the yield curve. It shocked me how creative they are and what they're doing, because they have to, because of where the debt is. So even if you thought, hey, you know what, I'll pay more than my fair share if I know it's going in the right place and we're actually watching the other side of the ledger. But as someone that we have to coach people every day who are discouraged, it's a tale of two economies for us. I work with a wonderful client. She worked so hard her whole life, managed debt, and she has a stock market. Her accounts are doing great. Her house has gone up in value. She doesn't like inflation, but she's dealing with it. Then I talked to a family the day before, 28, 30, they're just about to get married, and they're managing, Danny, but this couple, they're managing to save 25% of their take home. But to do that, they can't be like everybody else.
Well, they're making
they
hard
live in a
decisions
smaller
now.
home, right? And I even talked to them about, like, in 5 years, we think we want to move to a bigger home. I'm like, do you like the home you're in? They're like, yeah. We want to have a baby next year. I said, you have enough bedrooms? You feel the school district? What do you think about? Oh, it's all great. Why do you need a bigger home? And they go, I never thought about that. It takes conscious effort to save. It takes conscious effort to stick to a fiscal plan that parties can agree with. So it was so different talking about a retiree who saved all her life, managed debt amazingly well, and is harvesting and living off the fruits of that. And then a couple trying to do the same thing. It's, we get to deal with these kinds of different roads every day. And now you look at this Tax Cuts and Jobs Act coming in for this couple that probably make them, $125,000 between them. And they will get a tax increase when that money is best suited for them.
So think about what happens then, right? So this is just an average employee. So now money comes out of the market, right? Out of buying, purchasing other things, right? Because now you have to make cuts in other areas.
Yes.
So we already have a savings problem. We'll get into that here in a bit.
Oh, yeah.
But we have a savings problem as it is, and now we're going to make that problem even more difficult. So that retirement goal is more difficult to reach. The saving for the emergency funds is more difficult. And that's where I think it's tough. And I think that the point is missed so often. Oh, it's just going to be a small tax increase, no big deal. But we're already in a very difficult economic environment for saving.
Yes.
And now we're going to make that problem worse.
I like the way you put that, Danny, about the kicks, though. I didn't think about how the money flows, about all the things that have hit households where they hurt. And this one would be yet another blow they cannot afford. And we will be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back to the Real Investment Show, Financial Fitness Friday edition. I am Danny Ratliff. Richard Rosso has left the building. So we've talked a lot about these tax implications and what that may mean, not just to each and everyone's pocket, but to the overall economy. And I think it's one of those things that's not talked about often enough. And so we had a survey, and they polled people making $50,000 to $199,000. And so essentially looking at how do different things impact the middle class and how prepared are they for retirement. So last segment we talked about, the other implications. What does that mean? How is the average person going to be impacted if these tax cuts roll back? So if you're just joining us, Tax Cuts and Jobs Act, which was passed in 2017, came into law or effect in 2018, is set to expire in 2026. So effectively, we have one more year. And I suspect we're going to be hearing a lot more about this. We'll probably, what we'll talk about today will look different in the future, depending on what happens in November, depending on, all the powers that be. But, one thing we do know is that taxes will likely go up regardless at some point in the future with the way the government has spent money. So the study looks at the middle class, so those making between $50,000 and $199,000. So essentially, they're talking about the middle class epitomizes the American dream. So this survey was done by Transamerica Center for Retirement Studies. And the impact is fairly large in a lot of ways, in the sense that most people are not ready to retire. And, the median age for somebody that's retiring or leaves the workforce is 62. If you poll people and ask them, when do they expect to retire? A lot of times it's 65, it's 67, but yet it ends up happening quicker. Employment happens. The big one is health. Maybe your own health, it may be a loved one's health. You stop to take care of somebody. And so we don't get those last final years where we're not drawing down on accounts. Maybe you take Social Security early because you have to, just to make ends meet. And this is where I think that, these numbers are interesting. And really, quite frankly, I think they're kind of scary and sad because most people are just not there. Now, there's a couple things I think in this. And number one, we need to do a much better job with personal finance 101. I mean, just the basics. I don't think we teach that well enough in our school systems that, we're setting people up for success. I don't even think they teach people how to balance a checkbook any longer. And so, because nobody uses them, but most people are using the debit card or credit card, and that's where we can get in trouble as well. But of this survey, they found that the middle class has yet to fully engage in retirement planning. Only 21% of respondents said they have a lot of working knowledge about personal finance. 24% have a financial strategy for retirement in the form of a written plan. 17% frequently discuss saving and investing in retirement with family and other close friends. 34% use an advisor. And I get it. Many of them probably don't need one or think they don't need. I think you could always use somebody. And, I think that a lot of people make a mistake in as far as how advisors work and what they're there for. I think our industry has changed substantially in the sense that, I think people still equate kind of what we do as old school brokers, just there to sell a product. And there's still plenty of people out there that do that. But I would view somebody as a financial advocate, somebody who wants to see you succeed. They're vested in what you have going on. And, they look at everything from a holistic perspective, meaning that you're not just looking at how do you invest, but how do you save? Where are you putting funds? What are the things that you need to be considering? And then make those short, middle term, and then long term objectives, and then help you reach them based on the environment that we're in, maybe just, economics, financially, tax implications. Is your estate plan done? Do you have a will, a power of attorney? I mean, these are the things that you should be talking about. So, one of the things I thought that was, I guess we kind of know this, right? We talk about it a lot. 17% really discuss this type of topic. And I think a lot of people don't because they're afraid to, because they don't feel like you've done enough. And many probably haven't. Obviously, the study shows us that. And so we need to do a better job of sharing good and bad, especially if you have kids, grandkids. I think we focus on the successes, but, we always talk about the wins, but nobody ever talks about the losses. So maybe we don't make those same mistakes in the future. Granted, things are always evolving and changing, but middle class is historically, we're relying on a diverse source of income. And so 45% of respondents expect their primary source of retirement income to come from self-funding savings, including 401ks, 403bs, IRAs, and other savings and investments. 27% said their primary source of income would be Social Security. 11% said it would come from a company-funded pension, which we know that is a dying breed. If you have one, fantastic. 9% expected to come from continued work. 2% cited home equity or an inheritance. So the company-funded pension, great. Those are not nearly as prevalent, and we're continuing to see companies pass that on to the employees and not utilize those defined benefit plans any longer. Working at 9%, I mean, we see that all the time. People are working longer and longer, or they go to retire, you go back, you do contract work, or you're just picking up something to stay in the workforce to some extent, continue to get some type of paycheck, and then ease the burden on distributing funds from your assets. Now, 27% said Social Security would be one of their primary sources of income. Now, mind you, remember, they're polling people who make $50,000 to $199,000 a year. By most metrics, I think most people would say, these people are doing okay. They're doing pretty good. And 27% still are going to have Social Security as a primary source of retirement income. And actually, if we look back at the studies and we look at everybody as a whole here in this country, that number is much higher. It's closer to 62% as a whole for the country. A quarter of people that are retired rely on Social Security for more than 90% of their retirement income. So, going back and kind of tying this in with what we were talking about with taxes. So people in the middle class who are saving for retirement outside the workplace, they are invested in different ways. But it may interest you where they are. we talk about, even Rich referenced that, some people are saying, well, we're not worried about the market. The stock market doesn't matter. Well, that's true in some extent to many people because they're not invested in it. So the middle class, where they're saving or investing for retirement, 71% bank account, 43% 401ks, IRAs 38%, brokerage accounts 37%. So this is where they are saving for retirement outside the workplace. Primary residence 35%, life insurance 34%. Now, they found that it looked a little bit different when they started to ramp those numbers up. So instead of 50 to 199, you go 100,000 in income to 200,000. And you start to see a little bit more diversification of assets. So annuities, 15%. Cryptocurrency, 14%. Health savings account. Y'all have listened for any length of time. I love these accounts. 12%. Real estate in their primary, other than the primary residence, 11%. Business ownership, 8%. Non-fungible tokens, 5%. Now, this paints a picture, obviously, of, look, if you make more money, you have access to more things. And so you would expect that people with higher incomes would have a little bit different or maybe a little bit more of a robust profile for being able to invest in different areas. Now, top 5 retirement dreams. Traveling. 67% of respondents said traveling was a big part. Spending more time with family, 58%. Pursuing hobbies, 51%. Volunteer work, 23%. Taking care of their grandchildren, 20%. And this is one of the qualitative things we talk about often. And so, all of these things are typically there's a cost to them. So what does that look like? We focus on the quantitative, the numbers. How much do you have? Where are sources of income? Where are you invested? But we need to think about it from the expense perspective. Those funds are going somewhere to fund something. And that's where this is important. From how do you make these funds work together? Now, the key here is that all of these things, going back to taxes, the more we have to spend in taxes, the less we get to spend on these. So that is where we need to be mindful of what's going to happen. Listen, I know you guys on the chat have been lively of talking about all the things that are going on. So if you're listening in the car, you want to see what's going on behind the scenes, go to the YouTube channel, Real Investment Show. Go subscribe. Go click like, especially if you like what we're doing. But, we value what you guys are saying, and there's a lot that goes into it because you guys are experiencing it. You're in the mud. But hey, if you are in the Houston area, go sign up. September 14th, our retirement blueprint. We're going to talk about all of this and much more. How do we put these things together? What are the foundations, the focus of what you should be doing? I think it's so important. We haven't done a live event in a while. We've already got a lot of people signed up. We would love to see you there. We'll be at the Hyatt Centric, 9 a.m. in the Woodlands. Go to realinvestmentadvice.com. You can sign up there. Thank you guys for joining us today. Hope everybody has a great weekend, and we will see you on Monday.